Hello everyone, I'm Robert from bobthetradergpt.com. Today, I want to share what I believe are 5 major warning signs that every investor should be watching. First, geopolitical tensions remain elevated as U.S. military operations against Iran continue. Extended conflict increases uncertainty and keeps pressure on energy markets. Second, oil prices have surged toward $100 a barrel. Higher energy costs can feed inflation throughout the economy. Third, artificial intelligence spending is exploding, but many companies are still struggling to demonstrate meaningful financial returns on those investments. Investors are beginning to ask when the payoff will arrive. Fourth, we've already seen sharp market reactions to disappointing technology earnings. The market is becoming much less forgiving when expectations aren't met. Finally, my BOB technical indicators are showing increasing weakness in key markets. Gold has broken lower, and the Nasdaq is showing signs of heavy selling pressure. I'm not predicting the future, but I am saying the risks have increased significantly. Stay disciplined, manage your risk, and always trade with a plan. Let's look at the charts. The first chart is U.S. oil. Oil has climbed dramatically. When oil rises, transportation, manufacturing, and business costs often increase. That can put upward pressure on inflation. Now look at the U.S. dollar. The dollar continues to trend strongly higher. A stronger dollar tightens financial conditions and can create additional pressure on commodities and many growth-oriented assets. This combination of rising oil and a strong U.S. dollar is something traders should pay close attention to. If inflation remains persistent, the Federal Reserve could choose to keep policy restrictive for longer than investors hope. Markets will continue watching incoming inflation data and Fed communications closely. Meanwhile, my BOB indicators are showing increasing technical weakness in the Nasdaq while the U.S. dollar remains technically strong. Is this the beginning of a larger correction? We don't know yet. But the warning signs are becoming more difficult to ignore. This is why I call today a Bob Market Alert. Protect your capital, trade with discipline, and let the charts, not emotions, guide your decisions. And just in case there is a flash crash, red ink Friday in U.S. markets tomorrow. You heard the first warning here. See you in the next Bob Report. Let's take a look at IBM. This chart shows a massive gap down following IBM's latest earnings report. For one of the world's most respected blue-chip technology companies, this was a serious reaction from investors. IBM missed revenue expectations, lowered its growth outlook, and management desperately tried to explain that many enterprise customers delayed large technology projects as spending shifted toward AI infrastructure. This begs the question from investors: does IBM not understand their own clients? Just days before the earnings report miss, they painted a rosy expectation of the earnings report. Now, they are scrambling to clean up their mess, but truth be known, that price gap down and lost revenue and lost investor faith and trust will never be regained. CEO Arvind Krishna says those deals are delayed, not lost, and that IBM remains confident in its long-term AI strategy. Investors are not holding their breath on that promise. AI strategy and market capture of profit is more likely to go to the nimble and agile startups, while the overbloated and missed earnings CEOs like IBM continue to fumble the AI ball. But the market delivered a very different message to the IBM CEO claim. Investors are demanding results, not just AI stories and missed earning excuses. When expectations are high and earnings disappoint, even world-class companies can be punished quickly. The big question now is whether IBM is the first warning sign, or whether other technology companies could face similar pressure as earnings season continues. That's exactly why I'm watching the Nasdaq so closely. The market is beginning to separate AI winners from AI companies that still have to prove their investments will generate meaningful returns. Is IBM an isolated event? Or is this the beginning of a broader repricing of AI-related stocks? Will IBM replace their CEO and start cutbacks and layoffs soon? How the mighty are wobbling and trembling in their boots as AI-nimble startups capture market share. This is another Bob market alert. Trade with discipline. Do not trust even the bluest of the blue chips as they flash crash and rupture your blue chip portfolio. That gap down in IBM wiped out billions of investors. Money, protect your capital. And always think like a fund manager.